Coinbase earnings, they blew the expectations out of the water. As we've talked about over and over and over again on this show, Wall Street analysts make these estimations or kind of outlay their expectations. They're always wrong. On average, they're wrong double-digit percentages. So 10 or more percent usually is how off they are in this stuff. I don't know why we continue to look at the expectations. I don't know why Wall Street analysts continue to guesstimate what they think is going to happen, because they're just wrong. Literally, I could have and just made a guess, and I'd be just as wrong as they were. So revenue was expected at $1.78 billion. It came in at $2.2 billion. More than $400 million more revenue than what was expected just in Q2. The earnings per share expected was $2.3 earnings per share. It came in at $3.4, which means that literally they created more than $1 more in earnings per share, which, if you look at it, it's almost 50% off the expectations was the actual number. And so when you think about this business specifically, I should say first, one, pay me in Bitcoin. Just pay me in Bitcoin. That is where the world is going, is cryptocurrencies, Bitcoin, etc. Two, I was fortunate enough to be an investor via one of the funds in Coinbase in the private market. We hold majority of the shares still today. My personal opinion, I'm still very, very bullish on this business. Here's why. Q2 net profit, $1.6 billion, up nearly 4,900%.
What does that even mean?
From a year earlier. It means that their net profit was up almost 50x.
Yeah.
In 12 months.
It means they made a bag.
Yeah.
Secure the bag. Secure the bag. That is what Coinbase was doing. The monthly transacting users was 8.8 million, which is up 44% from Q1. A 44% increase in the monthly transacting users from Q1. On top of that, 462 billion in trading volume. That 462 billion in trading volume up 38% from Q1. Absolute monster business. Now, when you look at the key operating metrics here, we're going to pull up. You can see all the way back from Q2 2020 to Q2 2021. We went from 1.5, million monthly transacting users to 8.8. Absolute insane growth. Assets on the platform went from $26 billion in Q2 2020 to 180 billion this year. Net revenue, 178 million to 2 billion in Q2. Net income, 32 million last year, 1.6 billion in Q2. Adjusted EBITDA, 61 million to 1.1 billion. Absolutely insane financial performance. Now, when you look at their trading volume of this business, the retail market in Q2 did $145 billion of trading volume. The institutional market did about double that, $317 billion. Absolutely nuts. What's fascinating about this is the institutional market. If you go all the way back to Q2 2020, you can see that the retail and institutional market was actually much closer together. But the institutional market is pulling away. They've got bigger dollars. They do more trading. They're starting to pull away in terms of percentages. The institutional market makes about 2/3 of all trading volume on Coinbase today.
They added 1,000 institutions
in Q2.
In Q2 alone. They do Elon Musk, SpaceX, Tesla.
So that means that they added more than 10 institutions per day. Coinbase in Q2 added more than 10 institutions per day as a customer. Trading volume, fascinating. Ethereum, for the first time, ended up actually surpassing Bitcoin in trading volume on Coinbase in Q2. If you go back to Q2 2020, you can see that other crypto assets actually outpaced Ethereum, but not Bitcoin. Now, other crypto assets outpace both of them. And so it's 50% of all trading volume on Coinbase is outside of Bitcoin and Ethereum. Absolutely nuts to kind of see how this business is coming. Now, when we look lastly at where the revenue comes from, so that's trading volume. When we look at the revenue of this business, what you can see is that the retail revenue was $1.8 billion in Q2. Institutional was only $102 million. Now, Why is that? If we go back and we think for a second, remember that the institutional market had 2/3 of the trading volume, but they only have about 5% of revenue. How could that be? Oh, I know how. The retail fees are incredibly high. That's how Coinbase makes money. The retail fees on Coinbase are astronomical. Institutions do 2/3 of the trading, but only make up approximately 5% of the revenue. The institutions trade way more in bigger dollars, but they pay way less in fees. And so Coinbase loves retail trading on their platform. If you then look at things around subscription and services revenue, you can see that custodial fee revenue, 31 million, blockchain revenue, I'm not sure what falls in that, 39 million, and then their earned campaign revenue was 16.9. And so you can start to see that this business is about 5% all transaction revenue outside of trading. And then they've got 1.9 billion in actual transaction revenue, trading of retail and institutional clients. What do you guys think in terms of Coinbase? To me is one of those businesses that is going to live or die with the macro forces. If Bitcoin goes up, Coinbase does well. If crypto goes up, Coinbase does well. If they continue to print money, keep low interest rates, QE, the whole 9 yards, Coinbase does well. It almost feels like Coinbase will be successful regardless of if they execute well or not, just because the macro force is going to drive their business forward as long as it continues in the direction it's going.
Yeah, when you were talking, my biggest thought was it seems that Coinbase is so intertwined with, the performance of Bitcoin. How much is it like Brian Armstrong's execution? Like how much does that matter?
Is it though? I mean, Bitcoin went down like 40% in Q2 alone, and Coinbase made 40% more money?
Well, so this is a great point, because one of the things for an exchange is that an exchange benefits from volatility in either direction. If it goes up a lot or down a lot, then of course you're going to get a lot of trading. People are paying attention. The media is talking about it a lot. You and I are sitting there saying, "Oh man, Bitcoin went down, Bitcoin went up, Bitcoin, is being volatile." We talk about it, makes you think more. You go and you trade, do all this stuff. So volatility is fantastic for these businesses, regardless of if it's up or down. The problem is that usually what happens is when there's a drawdown, it's swift, but then it goes sideways. And so you get a lull. Whereas when you go up, you actually get a more sustained amount of volatility. So if you look over, let's say the last 12 months, right? We basically went sideways from, I don't know, maybe June or so. May, I think we were like $8,800 of Bitcoin, if I remember correctly, during the halving. And then we got all the way to about like October. Like $10,000, right? Not huge volatility, kind of went sideways for most of the year. Then starting in kind of November to end of December, we went from like 10,000 to 30,000. And then from beginning of January until maybe March or April, we went from 30 to 60,000. So really from November to like March or April, we went from 10 to $64,000, 600% increase, right? 6x. But then we went from 64 down to 30. And that drop actually only took, 3-4 weeks. So you basically had, call it 6 months of upward appreciation and kind of volatility. And then you had 3 or 4 weeks of downward kind of price falling. And so you just get a more sustained volatility on the way up, which means that it's way more profitable for a business. Now, what they've done is they've also added a ton of users. So the estimate was they were going to come in at like 62 or 63 million verified users. They actually have 68 million. So if you think about it, the United States is only 330 million Americans. They've got users all around the world, but to have 68 million people when an asset is this volatile, they're going to make money as long as they keep the service running.
Also, Coinbase was founded in 2012. That's before Robinhood, Gemini, Binance. It's like you forget that. I mean, this company is 9 years old at this point.
Yeah, it is 9 years old, but it's still young.
Right, yeah.
Right, like they've got, I think, double the user base almost of like a Merrill Lynch or a Charles Schwab. Like I think Charles Schwab only has 25 or 30 million users.
9 years old, and it's a $60 billion business.
Yeah, so it's like Robinhood, which I don't know where Robinhood's trading right now. They're huge. SoFi.com/pomp, $15 billion business, right? Like fintech in general has drastically felt the tailwinds of kind of this gamification, cryptocurrency, young people getting interested in this and coming up as a digital native. But I think that the Coinbase business, the three things to me moving forward that is going to be important. One, the macro tailwind. Will the interest rates stay low? Will there still be continued QE, et cetera? If that happens, more and more people are going to go to crypto. If that happens, Bitcoin and other cryptocurrencies will continue to go up in price. Great for Coinbase's business. So that's one, is the macro factors. Two is, can they compete with the decentralized services? So for example, let's use probably the most popular decentralized exchange is Uniswap. Coinbase versus Uniswap. At one point earlier this year, I don't know where the numbers are right now, but earlier this year I looked and Uniswap was doing, I think it was like a fourth of all Coinbase trading volume. So let's just call it somewhere in there where it's material, but it's not, kind of equal. And so when you think about that, Coinbase is going to continue to come under attack or competition from these decentralized services. I don't personally see a Wall Street institution coming into the market and saying, oh, I'm not going to go use a centralized service. I'm going to go right to the decentralized services. But what we just saw is 90+% of Coinbase's revenue comes from retail investors, not actually the institutions. Maybe that changes in the future, but right now those high fees is where all of the revenue is coming from. And so they've got competition in terms of decentralized services. And then the third thing is, can they get out of being solely dependent on the trading fees? Can they get into other things, right? And this was, John, you and I have talked about it a bunch of times. This was my whole thesis on BlockFi, right? When I first invested in BlockFi, and over the years, as I've continued to invest more and more, is BlockFi is kind of like a Square, in my opinion, right? If you think of Coinbase is equivalent to a Robinhood, right? In terms of it's a brokerage business. They want you to buy and sell.
Volatility is good for business.
Volatility is good for business, the whole thing. But if you think about, let's say Bitcoiners, the ethos behind Bitcoin or the thought process is I buy $100 worth of Bitcoin and I hold it. 60-something% of Bitcoin's never moved in the last year, right? So it's you made money on me on that one transaction, but then I hold it. If you look at something like BlockFi and Square, it's a payments and deposit business. So BlockFi has a whole suite of products that continue to offer financial services, right? So you've got things like loans against your crypto collateral. They have an exchange, a brokerage product. They have the interest-bearing accounts. They have the credit card where you can get Bitcoin rewards back, et cetera. So what you do is you end up actually building a whole suite of products. And so on a Coinbase, most of the revenue is generated and concentrated on trading revenue. If you look at a BlockFi that's got a suite, now all of a sudden you get a much more diversified revenue stream. You get a higher revenue per user, and you get a much more sticky revenue over time, because regardless of what somebody's doing, even if they're not buying and selling cryptocurrency, you're still driving value and capturing revenue because they're swiping their credit card, or they're taking out a loan, or they're earning interest, those types of things. And then the last piece of this is you take Coinbase brokerage business, BlockFi is more like a Square, and then you back it out into something like a SoFi. SoFi says we're not just going to be traditional financial services. We're not just going to have a deposit account. We're not just going to be able to buy stocks. We're not just going to be able to buy cryptocurrencies. We're also going to offer budgeting and saving tools. We're going to offer refinancing of your student loans. We're going to offer refinancing of your car loans, right? They kind of go much more holistically across the entire financial kind of spectrum. And so my thought process is, over time, everyone just continues to move more and more and more to that sticky kind of product suite. And it's just a matter of how quickly can we get there? What's the engineering time it takes? But it's very obvious that the businesses that get there, they end up having a much better business than simply being a brokerage business. And I think that's what Coinbase's big challenge is going to be, or maybe just like the big opportunity, however you want to look at it, is macro environment has to continue to be attractive for them. They have to be able to fend off this decentralized competitors. And then the third thing is they're going to have to expand into all these other services outside of just trading. If they do those three things, let's go, baby. Hey guys, thanks so much for watching that clip of the Best Business Show. Make sure you like and subscribe to the channel, turn on notifications so you know when we go live every weekday, and then head to SoFi.com/pomp so that you can get an account and we can get after it.